Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello subscribers, welcome to the Fast Profits Daily. I am Brijesh Bhatia. This video is for my Telegram subscribers who have voted for the view on markets, or I would say market kya lagta hai. Well, last week has been very brutal in terms of volatility. Though I would say in terms of percentage fall, it was not that. But considering the FII numbers, which was I would say 7,800 crores, probably DI bought somewhere around 2,700 crores. It was net somewhere around 5,000 crores negative. The FII minus DI cash. And that has been a worrisome for most of the traders, most of the investors. And not only that, it has created a pessimism on the probably I would say on the street. Most of the WhatsApp group or the Telegram group you are following, most of them are speaking about 17,000, 16,400, even somewhere 15,200 I have been read. Is there a base to their the levels which they are looking, or it's just an I would say the herd mentality. The most dangerous is the herd mentality rather than the base or the it may be on the chart, it may be on the fundamental, it may be on the economical, but without reason coming on to the levels where if you are reading somewhere and it means that it's 16,400, you spread on with the herd mentality that the targets are X and Y and Z. But I would say I'm not very much bearish over here onto the markets. There are ups and downs into the markets, and that's the reason the buyers and sellers both make the money in the futures trading. So let's look at the performance first, how this 2020 has been spent out. We saw India being one of the most outperforming global equities, though it was a gain of around 4%, 4.3 on the Nifty and 4.4 on the Sensex. And most of the global markets ended on a negative note. Dow ended around 9%, Nasdaq with a fall of around 33%, S&P 500 with a fall of 20%, DAX with the fall of around 12%, and CAC and FTSE. I would say CAC was negative with around 9%, but FTSE was a gain of 1%. Well, interestingly, FTSE has hit the new 52-week high yesterday, and it is on the verge of a major breakout where I'll be discussing the chart as well. If I just look at how the China is spanning out, and remember, China is opening after 3 years for business, though it ended on a negative note with around 15% downside. But remember the month of November and December, the way markets have come back, the quarters with around 15% gain. And I guess it was somewhere in 2020, the last quarter of 2020, Q4 2020, where we have seen 15% gain for Hang Seng. And this is the first time since 2 years that the quarterly positive 15% gain is being seen. And interestingly, it is again a chart of a breakout. So we'll be discuss that as well. Well, India is outperforming against the emerging market index as well. The MSCI emerging market index is down by around 20%, whereas Sensex is up by around 4%. So we have somewhere around, I guess, somewhere 12-13% of weight into the MSCI emerging market index. But yes, India is was one of the outperforming into 2022, and most of the articles you read, most of the world news you read, India is one of the most, I would say, the hotspot of investments globally. And again, things are changing for India as well. So let's look at the how the markets are looking at, or markets kya lagta hai. Let's start with the global first, the Dow Jones. Now Dow Jones, again, DAX is putting the pressure. The Nasdaq is putting the pressure onto the markets. IT giants or the tech giants have been correcting. We have seen a huge correction coming into Tesla. We started the year with the 52-week lows. We have seen Alphabet trending around $85-$90 to $100 mark. Though it's been ups and downs for tech, but eventually it's been one of the underperforming index, I would say the benchmark index, which isn't tracked globally, around 33% down. So yes, again, if I just look at the DAX, the Dow Jones chart over here, we have seen a breakout coming in November rally. Right, I guess around 28,600 was the low, and since the recovery, or I would say the V-shape rally, the short covering rally, has triggered a breakout of the weekly scale. We have been retesting around this, and markets, if you look at the last 3-4 weeks, have been holding these levels quite strongly. We saw the Friday session quite a strong comeback onto the weekly chart. Now look at the last right hand side bar chart, which was the last week chart. We have seen a close near the highs, plus the previous swings is being held, the lows being held. If I just look at the inside bar, also the inside bar breakout on the weekly scale is visible over here. Plus all these was at 50 weekly exponential, which is the green moving average. If you look at the breakout retest, 50 exponential moving average, inside bar breakout onto the bullish side, bulls coming back very strongly is a sign of bullish momentum. Plus, if we look at the lower banner on the RSI, we have seen RSI trendline breakout coming, the retest over there as well, and the slope now is turning northwards, which is again a sign of bullish momentum. Yes, so I would say Dow Jones chart seems still a bullish scenario over here. A breakout retest is visible. Second, just moving slightly towards the east from the US and moving on to the Europe, the UK. The first chart, as I said, 52-week high for FTSE yesterday. Look at the structure, a 55 months trendline breakout. I repeat, 55 months trendline breakout is visible onto the monthly chart of FTSE 100 over here. And the breakout, yes, if you look at the convincing, if you look at the last December and November highs, they're very much similar. We started the December month on a open and high equal nearly same on to the FTSE, and still it hold or second half came back very strongly. And this month, the Jan, though it's been early start to the Jan or for the monthly chart, but look at the breakout it's been giving. Yes, the convincing breakout indicates that yes, the UK is on top of the world as of now. Looking at the equity market. Second, if I just look at the European and move slightly more east, Germany, look at the DAX chart. It is on a verge of giving a fresh breakout. Interestingly, if I just look at right from 2022, where the lower high, lower low structure was in place for DAX, it has changed to a higher low structure. And if you look at the green line over there, the breakout happened, the retest happened, and now the blue dotted dashed line, if you look at, it's a breakout level, the fresh breakout level, and all this happening against near the 50 weekly exponential moving average, 200 weekly exponential, the orange line. Both are near the same, and prices are holding around these levels. MACD again moving average, a positive crossover, histogram trending above the integer line indicates that Europe is yes coming back very strongly. And I won't be surprised if we see the performance like India has shown against the US. This year Europe can show the similar performance against the US as well, and decoupling can be happen between the European and the US markets. What we saw into the Indian markets back in 2022, probably the money may flow into the European markets as well, and not only European markets. One country which I am strongly believing that 2023 will be its year is the China. Now, if you're an FPR subscriber, this month I have written onto the China as well, and why I believe. So that China is very 3 years economic was a close down, zero policy, zero COVID policy has seen that businesses, China is open for the business. Now the major demand come from the China is the manufacturing, metals, a big driver for the commodity basket, chemicals coming back very strongly. And if I just look at technically, even if you look at the Hang Seng chart over here, a fast recovery between November and December, taking a trend line breakout, and this trend line is right from around 2021. We have seen a huge comeback. For the first time, it has closed. I guess June, July 2021. Post that, for the first time, it has closed above 50 weekly exponential moving average with a trend line breakout. And most importantly, why I am convinced that this rally is just a start. Look at the lower panel. The bullish range shift into the RSI is a sign where Hang Seng can be a strong outperformer for next probably first half. At least I am looking at the China will be leading the markets. And two countries, as European indexes and the Chinese indexes, may see outperformance against the US and India as well in the current year. I'm not saying that India won't be rallying from current level, India being the one of the hotspot investment avenue. But yes, we have been rallying higher. These indexes are coming out of the woods and giving a fresh breakout. So acceleration into the bullish trend could be faster into the European and the Chinese market rather than the Nifty. Nifty will slow and steady pick, and China being a leader into the Asian indices, it will gradually take other indices at the higher level as well. Nifty being trending at higher level, it will boost the momentum, but probably the rally would be faster into the Japan and the Chinese market. What about Nifty? Well, last week I think most of the traders have seen a volatile, and it was a stock specific more than the index. Index was even though down 1.5%, but stock wise we have seen a huge correction coming into the large caps, or you would say the mid caps. Though mid caps have seen a performance against the Nifty, but let's look at the Nifty chart. What are indicating? Like the Dow Jones, if I just look at the Nifty chart, the breakout has been happened 17,800. We saw 17,800 being retested in the last week. The retest has happened at on the weekly scale over here, and if you look at the green line again, 50 exponential or weekly exponential average is being held very strongly onto the weekly scale. Plus, if I look at the lower panel over here, the RSI still trending with the higher lows. There is no divergence as of now. When prices are trending with a higher low, RSI also being trending with a higher low, and it's trending about nearly around 60 level, which is again a bullish entry if I just look at the RSI study. So I believe yes, the strength is still there into the Indian market. 17,800 will be a key support area. Excuse me. If I look at this daily chart over here, the second chart of the Nifty, I am looking at the bullish AB equal to CD over reciprocal AB equal to CD now. So basically, the move of A fall would be equivalent to C and D, which completes somewhere around 15,000, 17,560, 17,600 levels. Plus, if I look at the Ichimoku, the cloud, the markets have been placed right at around 17,800 cloud level. So, I believe yes, 17,600, 17,800 will be an excellent support area for bulls, and I'm still believe markets are very much trending bullish. There are no signs of a negative thing happening onto the larger scale. Though daily momentum may see 100, 200 points plus and minus, but I believe 17,600, 17,800 stands out to be a very strong support. Plus, if I look at the 200 exponential moving average, it is placed slightly lower than 17,500. So a broader scale, 17,500, 17,800 is a key support area for bulls. There could be a time correction over here, and we may see a higher levels coming with the global markets. But this is an excellent opportunity. I think as an investor, you should definitely look for a stocks where you want to accumulate, where you want to buy for a medium to long term per se. This is the best level I believe onto the markets, and there are no sign of as of now from looking at the longer period charts. There are no sign of bearish. What about Bank Nifty? One of the outperforming index have seen a huge correction in the last week. If I just look at the volatility terms, yes, it was a huge volatile week. Not only last week, prior to that week also we have seen a huge volatility coming in. Let's look at the chart over here, and if I just look at the Bank Nifty, it is a retest of breakout. 41,800 was a breakout level. We have seen that retest coming again onto the Bank Nifty. It of the generally, if I look at the technicals, and those who are following technicals may understand that the breakout retest are an excellent entries or excellent opportunity with low risk and high reward. The stop losses are very narrow and compared to the rewards which we look at. So if I just look at over here, it's being retesting, and retesting is offer always an excellent. We have seen on a weekly scale, look at the lows. We have seen a similar lows the week ending, the last 2 week ending of December and the last week. Still the lows are being held, and I believe if in case 41,000 is not breached, or probably keeping a cushion of 40,800, index will remain into the bullish trend until 40,800 is not crossed. I am very much convinced that Bank Nifty is a huge opportunity to head higher, and I would be surprised if we may see around 44,500, 45,000 levels coming into the Bank Nifty probably in a month or two. So yes, the structure seems an excellent. Global structure seems an excellent. Again, I would repeat, Dow trending at support, European markets coming back here, UK hitting the new 52-week highs, DAX on a verge of breakout, Hang Seng breaking out, Nifty retesting the breakout, plus daily chart indicating a retest level. All this sum up that yes, we are not into the bearish trend as of now. If in case trend may change, I'll come up with a video again, but as of now I believe yes, we are into a bullish scenario, and definitely look at the buy on dip strategy. As an investor, choose out the stocks where you want to invest for next 1 year, next 2 years. I believe yes, it's an excellent opportunity for markets, and even for trading, it seems an excellent entry level. Signing off, Brijesh Bhatia.